So October is known to hold surprises when it comes to presidential elections and campaigns. What about gold? We'll be asking Peter Hug. He's up next. Peter, thanks for being with me. Not used to having you so far away, though.
Yeah, I miss you as well, Daniela.
Peter, can we expect volatility for gold this month?
Well, yesterday, I felt like I was on a fishing trip that somebody put a lure out and, tried to bring everybody in when silver popped over 35 and gold tried to test 1800. It took extreme discipline yesterday not to jump into that market. I'm still waiting for a close for gold of 1779 on a close basis before I think the next move to 1820 will happen. The longer it takes to break through 1779, the more it may come down on some profit taking, but constructively this market is bullish.
Many research firms, Peter, now re-looking at their targets for gold year end. Deutsche Bank just released today, Tuesday, that they're now looking at 2,200 gold for year end. What are your thoughts on this?
Yeah, I obviously I don't see 2,200 by the end of the year, but given the Fed stimulus and the European stimulus, I'm really hoping for a correction here. But once we have that correction, I think taking out the 1,925 high from last year is certainly doable. 2,000 psychologically is going to take some work to get through, but once it does, and I do believe it will, 2,200 to me is a realistic target for sometime in 2013.
So Peter, let me ask you, through all your years of experience, why does October tend to be more of an active month?
Well, this year we've obviously got some of the issues with the election and the fiscal cliff and what's going on in Europe. But there's really nothing else that occurs in October that would create the kind of volatility that we've seen over the years. I just think it'll be volatile this year for specific reasons, but I'm not one of these that says, one of the guys that say, just because October last year or the year before was volatile, it'll be the same this year. We're coming out of September with good volume. I think that volume will follow through in October. There may be some profit taking before the election, but after the election comes out, I think the markets are probably going to continue higher.
So Peter, let's look at some news headlines this week. I know China's on holiday because of Golden Week. What else should we be paying attention to?
I would just look at the headline news. There's a rumor today that Spain is going to be coming and asking for assistance by the weekend. I think that'll have some impact on the markets. But right now, I'm focused on a very short-term basis on ranges. And again, if gold can technically get over 1779 on a close, I'd be a buyer. I'm watching the U.S. euro. If the euro breaks above 130, I think that'll be the catalyst for the metals to move to the next higher paradigm. But if the euro can't break 130 and there's some profit taking in the euro, I can see gold testing the 1620, 1630 level, and I can see silver testing 3280 before the uptrend resumes.
Peter, let's just look at Spain 1 second and the austerity measures there. I was speaking to Adrian Day, veteran analyst over at the Toronto Cambridge House show last week, and he was saying this would not necessarily be good news for gold. What are your thoughts on that?
It really, in my opinion, it depends on what it does to the equity markets in Europe. If the equity markets in Europe go into a free fall, and that spills over into the U.S. equity markets, I agree with Adrian that that individuals and investors generally are going to try to raise cash, which will be short-term negative for the metals. But I think the European issues will continue to be a front burner story for the balance of this year and well through 2013. I do believe that the U.S. Is going to have its own issues. It's difficult not to be bullish this market at zero interest rates, but I do think this market is ahead of itself, and I am expecting a correction.
All right, finally, Peter, let's go back to your fishing analogy. Those prices looking like a big, juicy worm, but you're saying resist temptation, hold?
Yeah, I would hold. I mean, if you're a trader, you would have got burnt yesterday badly by jumping into this market. You've got to, as a trader, you've got to trade the technical levels, and you've got to use those technical levels on a closed basis. As far as an investor goes, if you're not in this market, I'm hoping that there will be a correction so you can enter this market. But the metals, in my opinion, are definitely still on an uptrend. And I think the highs of last year will be taken out, at least in gold. Silver will have some work to get through 50. But if gold gets up to 2,200, I see silver in the $50 to $60 range.
Good thoughts from you today, Peter. Look forward to having you close by again soon.
Okay, Daniela, nice talking to you again.
And thanks for watching this edition of For Pete's Sake. You can email both Peter and I at newsfeedback@kitco.com. For Kitco News, I'm Daniela Cambone.